Hello everyone, Jesse Webb, Traders Pro. Market conditions have slipped back into mildly bearish. Not surprising. We've been talking about this retracement zone right here, and so we're continuing to see momentum stuck right in that kind of that non-trending zone, just stuck in this range. We're seeing breadth, which has moved back down into that bearish trend a little bit as well. Just not a real super strong market right here, obviously, and some of the reasons why are that we just don't have all of the participation. We still are getting 2,500 sells to 800 buys, so we've just got a larger number of stocks in downtrends, and the market can't seem to break through that. We want to obviously see this continue to move higher and this cross lower and this become green. Something like this would be a more ideal market condition. Once that happens, we're going to start to see some of these muscle stocks and these new buy lists really start to pop. And when you get market conditions like this, there's a lot of back and forth, and some of the big winners that had started out end up getting sold into, and it just creates for a little bit more choppy environment when we have a setup like this for the upside. The downside ends up working a lot better, obviously, because we do have the market as a whole in a downtrend. If we take a look at sentiment, a couple things to be aware of on sentiment is if we look at bonds are really one of the issues that we're still dealing with, and that is interest rates moving higher and bonds moving lower. But on this sentiment chart, we're actually starting to see some possible divergence starting to happen right here. And I'll show you that TLT chart, but we're getting a higher low and a pullback on bonds. So if we could see, if we could go out and see TLT, which is the ETF for the long bond, we're getting support right here, a potential double bottom. So in addition to that sentiment indicator creating some divergence where we have higher momentum on the sentiment indicator, but we're making new lows to equal lows on bonds, that could set up for some upside here in bonds and potential double bottom. I think that would be welcome to the market as a whole. One of the other ETFs to be aware of is this PFIX, which is a leader right now, obviously, because it has bonds have just been getting crushed. So interest rates, this is kind of the opposite perspective of bonds. When bonds are going down, interest rates are going higher. So if we could see interest rates, start to pull back down a little bit, that would equate to a bond rally as well. And again, I think the market is kind of watching that and waiting for that. We're going into earnings season now as well, so we could start to see some catalysts on earnings one way or the other, either good or bad. The sectors we saw yesterday, a couple slip back into the downtrend, into the sell range, and that's really what we're hovering with right here. We're getting back and forth on the short-term trend. The longer-term trend is either hold or sell. We've yet to see one of these sectors pop up into that buy zone. So again, conditions, just glancing at that, that's the condition of the market as a whole. Some weakness with a little bit of, neutrality right here in that hold range, and we're seeing that in S&P 500. If we go to SPY, and the range that we talked about yesterday is this current zone right here, which is a 50% retracement of this entire move. So from this low to this high, halfway back is 50%, and we slid through that, found some support at that 618. Now we're up above it. We kind of broke through that yesterday. That could potentially be an issue, but this is now starting to look like a three-part counter trend. If we could get a bounce here and start to move higher, this actually could have enough counter trend and corrective timeline, and possibly a little 50% move on this most recent 3 or 4 day rally from here to here, pulling back halfway, finding some support in this zone, and then start that march higher if we could clear up above that 438. So there is some bullish tone in this pattern. This is actually quite a bullish pattern here as well. When you get this pattern, counter trend ABC rally, and then another smaller counter trend ABC at some support. Now if we could get a confirmation move up, I think we'll see some continuation, potentially at least to break through that area and then start playing around inside this zone. This will be that next zone that we start to be aware of and watch for. Let's take a look at a few stocks in here. Muscle Stock Group, the new buy list. Not a lot in there today. MLTK, which is a biotech. Biotech and biomed and anything, biopharmacy, these are all having a lot, some uptrends. They're very volatile. As I mentioned in the past, be very cautious with these kind of stocks, especially if they have been jumpy, if they've been real gappy and moving around like this. That's the characteristic of that stock. And so you want to be cautious, knowing that it could jump up or down by 20% and making sure the position size is according to your risk tolerance so that you're not surprised if, they have a drug that hasn't been approved or there's issues and stocks like this can drop 50% in a day. They can also go up 50% in a day. So they're definitely worth watching and keeping an eye on. This one's up 400 or 500% just in the last year. So something's working for this stock. It's worth keeping an eye on, watching for a potential breakout on MTLX. Is that what it was? MLTX. Let's go to the next one here. TDW, which is an oil stock. Tidewater. Really good looking fundamentals. Annual EPS up. Quarterly EPS up, sales up, not fantastic, but moving in the right direction, and leading stock in that upper momentum range, and one to be aware of and to be to keep an eye on currently. Oil stocks are continuing to move. We've kind of been pausing right here as oil has been up, pretty volatile in the last few weeks as well. IAG. Gold stocks, some of these gold stocks you may start to see showing up in some scans. We've had pretty deep retracement and have yet to be able to pull out of this downtrend. Anytime there's been an attempt, we've been getting some false signals as ultimately it just reverses back down, and then this ultimately becomes that trend versus this. At some point that's going to shift. Whether or not that's starting to happen now, it needs a little bit more time on this pattern, but in the short term it has notched up into that buy zone on that 1 year time frame, bouncing off that 618 counter trend location. That's still the bias, meaning on this time frame, 1 year, we're snapped to our high and our low of the time frame, and it's telling us that on this 1 year time frame the trend is still up. We've now corrected 60% of that trend. This is the halfway mark. This buy zone, this 50618 buy zone, really becomes a really strong support area for a lot of stocks to find some support. The selling is over. You get new demand in those locations, and that could be happening on this stock here, IAG, as gold is starting to kind of light up again. Here's another one that is not in that momentum zone. I prefer to have them in that upper range. That 6 month time frame you can see is even in a downtrend, but it's had a big run the last year. So the rank is the last 12 months. So this entire move is still being calculated in this rank, even though it's had a pretty deep retracement. But that pullback in this longer term pattern, this bottoming type pattern, when you start to see this where you get a low, a new low, and then a potential higher low, it's that inverted head and shoulders where this is called a head and shoulders pattern like this. The inverted version of that looks like that, and that's a bottoming type process that could be happening on this stock as well. That'll do it for today's update. If you don't have full access to the site and software, there's a link below that you can get signed up. We look forward to having you. Have a fantastic day today.